Thank you, Mr. President. I rise today in strong support of the Wall Street Reform Conference report. Mr. President, the Senate will make history when we pass this legislation that finally holds Wall Street accountable and finally cleans up the schemes and abuses that nearly brought our entire economy to its knees. Most importantly, this bill ends for once and for all taxpayer-funded bailouts of Wall Street banks and investment firms. It finally gets rid of any notion that any private company can somehow be too big to fail. I never bought that argument. In fact, I was the only Democrat in the Senate to vote against both the bailout of Wall Street's and the auto industry. I don't believe in bailouts, but I do believe in making sure folks are playing by the same rules. Our economy went belly up a year and a half ago because there were no referees on the field. And with this bill, that is about to change. Big banks will be required to pay for their own liquidation should they fail, and taxpayers will never again be a part of that equation. The bill also streamlines the regulation of Wall Street, providing the referees the tools that they need to get the job done fairly and effectively. It also ensures that everyone will now be playing by the same rules and that unregulated entities offering financial products have to live up to the same standards as the community banks and credit unions that serve states like Montana. The bill has tough new rules to prevent the spread of risky and dangerous products like subprime mortgages that torpedoed our nation's entire financial industry. My focus over the last several months has been to make sure that this bill is right for Montana and right for rural America. Mr. President, after some hard work, I think we did just that. This Wall Street reform bill is good for Montana's community banks, and it benefits small businesses. Even in this era of bitter partisanship, the Senate unanimously passed an amendment I offered to make sure banks only pay their fair share of federal deposit insurance. Right now, smaller community banks are paying for 30% of this insurance, even though they account for only 20% of all bank assets. That doesn't make sense, and this bill fixes that problem. This conference report also includes a provision that I drafted requiring the Consumer Financial Protection Bureau to consider the impact of all rules on community banks and credit unions and the rural customers that they serve before any of those rules are made. This legislation ensures that community banks won't be punished for bad behavior of the mortgage brokers that offered risky mortgages. Those banks will be able to maintain the community-based regulators that they currently have, and in the case of state-chartered banks, the same lending limits they currently have. Additionally, this bill ensures that community banks will be able to continue to provide the same mortgage products, including those specific to farmers and rural Americans to their consumers. For small businesses, this legislation makes it easier for investors to help get new small businesses up and running while protecting investors from schemes. And it exempts small public companies from costly additional compliance and regulation under Sarbanes-Oxley. This bill is a win for Main Street. It holds Wall Street accountable and preserves a critical role community banks have in strengthening communities, creating jobs, and building small businesses. That's important because Montana families rely on their community banks to finance and grow their businesses and farms, help pay their bills, and to put their kids through school. This is a strong bill. It ends taxpayer-funded bailouts, and it begins a new era of strong common-sense regulation to put the sideboards on our fast-moving financial industry without taking away the fundamental tools it needs for healthy competition and growth, which strengthens this economy. But let me be clear. Our work on this legislation doesn't end today. I will continue to remain vigilant to ensure that this legislation is implemented and enforced in a way that it was intended. We simply can't afford to do nothing and let our financial industry go by the wayside ever again.